Hello everyone, welcome to this episode of Market Pulse. I am Ajit Mahuli, the founder and mentor at Learn Price Action Trading. Let's take a look at what the indices have been doing and are likely to do in the coming week. All right, so Nifty gave a new high last week. Thursday, Friday, basically last 3 days of up move from Wednesday, Thursday, Friday was super move, nearly about 700 odd points. But now the momentum has stalled. On the monthly, there is no change, very, very high, and prices have just run away. We'll have to wait for a pullback at least up to, let's say, 19,900, 20,000 for decent, good reward to risk ratio swing longs. That's the monthly demand zone. Explosive rally. So on smaller time frames, you'll have much better areas to look at. So on the weekly, if you see this, that's the area where we can look at getting into a good long position. Probably the volatility will bring it down now for the index all the way. There is nothing to stop it. So if it comes down, the immediate move could be at least till 20,700 based on the weekly no supply zone overstretched, waiting for confirmation. On the daily, again, overstretched. Today, we opened with an inside gap and failed to go beyond that. Now, we need to wait for a couple of more days to see how price behaves. And on some confirmation on smaller time frames, you can get into some spreads or options trades on the bearish side. Because on the daily, the next demand zone is all the way here. So on all the time frames, there are no supply zones. The immediate demand zone is here. So 20,500 could possibly become an intermediate top and we might pull back again towards that area of demand zone. That's the all-time high, and that's what is expected. So we have to be cautious on the long side. Shorts are not yet on the futures, not yet really triggered, and they are very, very aggressive since the trend is strong enough and the momentum is strong. Today is the first day we saw the momentum dying. So maybe another couple of days, and we'll know probably in the next 10 days, we could see a pullback all the way towards, let's say, 21,000 at least. Maybe after this expiry, possibly. On the 75-minute chart, if you see, prices are retreating back from that areas. It just failed to go to that high of 493. That's the new area of demand zone, which has been tested once. So a better demand zone or a minimum target for a pullback in the index could be somewhere close to, let's say, between 21,300 to 21,200. That can possibly happen if the global markets also start correcting. We could also start probably correcting. This is more of a profit booking move. New longs only at these areas. Here you can look at intraday longs. So those are going to be your day intraday trade levels, which is good 280 points. So bullish bias overall, but very, very overextended. Wait for some confirmation. Let's say maybe let it breach 300 and on a pullback around 400, you can get into shorts, or those who are aggressive traders can get into some weekly spreads here for the index up to this. New longs can be initiated based on confirmation or aggressive intraday longs at about 21,200. So a cautious approach, avoid longs, shorts are still aggressive, maybe hedge shorts or futures with call options or even spreads are a good idea at this point in time. Remember, we are very overstretched. We have just run up for the last so many weeks non-stop. There is bound to be a pullback, and we would pull back towards at least, let's say, 20,700. So you need to be patient. And another point to note is India VIX, along with it, is also rising. So our target app for India VIX has been somewhere close to 15. That's where we are headed towards. If you see India VIX is making higher highs, probably tomorrow it might go beyond this. So when it comes into these areas, we could probably be somewhere close to 20,200 areas. That's where, based on some smaller time frame confirmation, we can go long into the indices for short term, maybe intraday or a day kind of couple of days trade. All right, so cautious approach. VIX is also rising along with the index. That's not a good sign. For longs, again, Bank Nifty strong move up, 2 months of continuous rally candles. That's the area of demand zone on the monthly chart. A little bit overextended. We need to wait for pullbacks to go long. The trend is intact. Every dip or a pullback to decent demand zones is an opportunity to invest into Bank Nifty or buy Bank Nifty on the long side. On the weekly, that's a very, very good demand area that we have formed now, which could probably be the area where we can go long for some swing trades again up to, let's say, 47,500. But right now, we are very overextended, need to wait for more price action clues. Only thing that you can do is be aggressive and take a head shot with futures or get into some spreads because the pullback is imminent in these cases. So that's going to be the range between, let's say, I would say let's 45,500 to 48,500 would be the range for Bank Nifty for the coming few days, or let's say up to end of December. On the daily today, it's interesting to note that the Bank Nifty opened with a gap and sustained and closed below. The immediate next area where it could go towards is 47,500. That's the area where it could possibly move to. And then once it breaks this, we could see it coming down all the way near 46,800. So step by step, it is going to move down. Uh, just be cautious. Once on the long side, avoid getting into any longs. Once we go below 47,500 and close, we could probably head towards first 46,500 and next will be 45,500. So pretty wide range. It's a tricky scenario for Bank Nifty. Longs only intraday, or if you want to hold longs, make sure that you buy some hedges and then take it. That's an area of demand zone where you can again look to do some short-term trades on the long side. But if it starts moving below this, we could easily touch 47,300. So cautious approach, confirmation shots on Bank Nifty. All the stocks are overextended. Wait for pullbacks to fresh areas of demand zone to go long, and shorts only if you are capable of having that kind of risk, since volatility is pretty high. So cautious approach towards the markets this week. We could see pullbacks starting this week and might be even extending into next week. Or it might just remain range bound between 48,300 and 47,500 for the rest of the month. So it's going to be a patience time. Wait for more opportunities. Look at stocks which are low on the curve. Avoid stocks that are very high on the curve. Hope that helps. Please go through the disclaimer.